Hey everybody and welcome back to my channel. In this video today I'm going to share with you a recap of a winning trade that I took, where more importantly I managed my risk really effectively to maximize my profits. I'm talking about how to add to a position whilst you are trading to both protect your risk and increase the amount of money that you make on the trade. This trade was a trade that I took in both my live account with IC Markets and also in my prop trading account that I have with the 5%ers. I'll talk more about that account and also an update on it later in the video. But as always, all of the software that I'll be using will be linked in the description below. Please remember to like and subscribe to the channel, and let's get straight to it. Hey guys, so I've just loaded up my broker here. This is the account that I trade with the 5%ers, the hypergrowth program. And if I just go into my history, and I'll just load up this previous week and you can see the trades that I took. Now the trade that I am recapping with you today, so this isn't a trade I'm obviously taking live now. I've already taken the trade, but it was in the live markets. I took it on Tuesday, the 3rd of December. And at first, it's interesting to know here that there was indeed a loss. So I had a loss first and then I had two winners, which gave me an overall green result, which is great. And I'm going to go through the entire trade with you step by step on my charting software here on TradingView. I've used this really handy backtesting tool on TradingView to take my charts back in time. So the data you're looking at here is what I saw Tuesday morning before I took this trade. Now I did a separate video which gave an analysis for this week, which I'll include a link to above. And that's why I had a plan in mind already on the Tuesday, because I had already done my pre-market analysis at the weekend. Also, there was no major news due out until 3 o'clock in the afternoon. So that's why I was trading at this time in the morning during the London session. And basically, what I was looking at here, my original plan, looking at basic market structure, was that price had been coming up. We made a new high and a low here. Price made another high here, it made a low, and we got this kind of peak here before we started to see this drop down. It broke these two key structural points. We had a little pullback here. We had a new low which closed below this low. So from this analysis here of market structure, this gave me a short bias. So I was looking to go short with this little reversal pattern we are seeing. And so on the Tuesday morning, I wanted to look for a short, but where do you get short? Well, I used my Fibonacci retracement tool here to identify some areas to watch for a short. So first of all, I looked at this previous pullback we had, and I used my fib tool from the high using the bodies only and dropped it at the low. And this gave these three areas of optimum trade entry right here, which I will mark out with a rectangle and delete the tool. I then used the fib tool and went from the very high. I then used the Fibonacci tool again, but I went through from the previous pullback to this one, which was more of a major pullback here. This was the highest point on the Monday. And once again, I marked the three areas of optimum trade entry. Now, these are the 62%, 70%, and 79% levels. I talk more about them in a separate video, which I will include a link to for you. Why have I drawn these levels? Well, on the Monday, we had this big drop down. In fact, let's add the previous daily high and low indicator here. So we can see that this light blue line here is the previous daily high, Monday's high, and this dark blue line here was Monday's low. And currently, price had opened up and we'd kind of just been going sideways. Now, I wanted to pull back up more into Monday's candlestick before I went short. And that's what these fib levels are for as well. They are areas to watch to go short. I initially set a short order at this first Fibonacci level. I set it in the middle of the level at 65, and I used a 10 pip stop loss, which was above this high of day. So price opened and we had a current high of day at this level here, just at the bottom of the fib. And I was aiming for a 1.5R target. So during this London opening session, price rallied up and it entered me into my position short. When I got this large wick rejection here with a small body, I held onto that position because I still thought there was a chance that price may drop. However, we didn't get the drop and price rallied up and hit my stop. And that's the first loss that you saw in my broker account. And I would still take it again. It was a valid trade because we don't know what price is going to do. I had a plan, I'm short biased, and I got in at the highs here aiming for this drop down, which we didn't get. So what happened then? Well, obviously I got out of the trade with a loss. I sat on my hands for a little bit and thought, well, let's wait to see what it does at this next Fibonacci level. So price pushed up with some very strong momentum here. And at this point, I once again went short. Now, because we were seeing some large candlesticks, some large momentum, I decided to use a much larger stop to account for the volatility. So I used a 20 pip stop, and I used the same 1.5R target, which is my usual target for trades. Now, it's also important to note here, this video is about adding to a position. Because I was considering adding to a position, my first trade here was actually using half of my usual risk. And the second trade was once again using half of my usual risk. Because sometimes this is how I will trade. I will get into a position using half risk, and once I get a confirmation, I will then add to that position. So this second trade here, once we got this drop down here, that's when I got into my trade short because I saw that the bears were coming in. How did I do that? How did I get the extra confirmation? Well, I actually dropped to a faster time frame. I dropped to the 5-minute time frame because you can see a little bit more information, and I really like this pattern that's forming. So although we had the strong push up, we had a little pullback here, another push up, but this very strong bearish candlestick down that closed below this low, and then from then price starts to slide down. We had a little green candlestick, not much, and then another bearish candlestick, and that to me is a change in behavior. It shows that the bears are coming in, and the very nature of this bearish candlestick here, it's a very strong, large candlestick down, and it creates this gap in the market. So this all works together to formulate a confirmation for me to take this short. So I had already gotten in short here, but I then decided to add to my position. So I set a sell limit order. Now we got a little push up, and you might be able to see the wick literally just triggers me in short again on the sell limit before price then starts to fall, which is a really nice entry. And as we start to fall like this, I immediately trail my stop loss to break even. And this is how I trade when I add to a position, is I am much more on top of my management. I look for precise entries and I trail a tight stop. So I'm really trying to ensure the accuracy of the trade and more importantly to avoid it losing. Now at this point, I was also looking at profit targets. So on my live account, I was actually aiming for a much larger target. I was aiming for a 6R target, 6 times what I was risking for the trade. For my second position, the first position remained at a 1.5R target. And as price started to fall here, it hit my 1.5R target. I trailed a really tight profit stop on my account with the 5%ers, my hyper growth program, purely because it's a prop trading account and I wanted to bank the profits. And so when price pulled back here, I got out again, and that was the close of both of my positions with that account. So that's how I ended up with the first loss and then the 2 equal winners at 1.5R, which meant that I had a 3R collective win minus my loss from the previous trade, gave me a positive 2R win on the day. Now I trade this account very differently from my live account. I aim for just a simple 1.5R weekly target, which I'd surpassed with this trade, which was brilliant. However, on my live account, I didn't have this trailed stop. I had it open at 3R, and I continued to kind of keep an eye on this as it came down. The price made this pullback, and then as price dropped down here on my live account, I trailed a really tight 2R stop, which would have been around about 42 here, 40 pips from my entry. So I actually got out of this, my live account shorted than this original target. And I'm kind of glad I did because it didn't ever go down to that original target. Price then turned and went up. And this insight here is just sharing some key points when it comes to managing risk when you are adding to a position. So you want to take into account what you're risking for the trade. So for example, in my live account, I risked 0.5% on the first position, 0.5% on the second, so that overall I'm risking 1%. So my risk doesn't change, but you just simply adjusting your position sizes like this and taking 2 positions because you're waiting for that extra confirmation. Because if this first trade went against me, at least I'm only losing half. But because I had this extra confirmation, it increases the accuracy of the second position and obviously the overall 2 positions here. It's basically a way of trading to improve your accuracy for the trade and to reduce your risk, which is a much better balance of winner to loser. And for those of you who are interested in my progress with my prop trading account with the 5%ers, here is my dashboard. I'm enrolled into the Hypergrowth program. I am still in the program evaluation phase, so I've not hit the target yet. I've been taking it so slow, but it's been keeping it pretty simple. in terms of managing my emotions, keeping the mindset focused, and obviously hitting those goals. Perhaps this isn't the way that every trader likes to approach a prop firm challenge. I've not had a get rich quick mindset on this, but I'm focusing on the long-term goal. And as you can see, my equity curve is doing really well. So I'm getting very close to that target now. I'm hoping I pass it before the end of the year, but time will tell. But the reason I can keep focus like this is for two reasons. Firstly, the 5%ers have removed their time limit on these challenges, which is a complete game changer. I wouldn't consider any other challenge that has a time limit because it just gives too much stress for trading, which is certainly not needed. And then the second reason that I can trade like this is because this program in particular, the hyper growth from the 5%ers, has a really cool scaling plan, which means that if you focus on hitting those targets over time, they will scale the account size up all the way to a $4 million account size, which for me is super exciting and why I can focus on the present moment and just trading the best. If you want some more information about the 5%ers and the programs that they offer, there is a link below in the description. They offer hyper growth, high stakes, and bootcamp. I definitely check them out. I've also created a separate review of hyper growth if you want some more information on that. Meanwhile, if you've enjoyed this video, please let me know by smashing the like button and don't forget to subscribe to the channel below. Also, if you've got any tips on ways that you trade to reduce your risk or to add to a position when you're trading, let us know in the comments below. It's always great to hear from you. Thanks for watching. Bye.